Hello everyone, welcome to A Little Cardinal. Today I want to talk about the stock of Thermo Fisher Scientific, ticker TMO. This is a stock that I have been interested in as I have been looking for some companies that could have some good price growth over the next couple of years. As we can see from this graph, Thermo Fisher has seen really great growth over its inception. However, in the past 5 years, it's been very choppy. As such, from looking where the stock is now relative to where it has been in the past, I've been really interested in looking into the fundamentals of the company to see if this is something that I want to buy. So today I'm going to share my research with you and give you guys my conclusions on it. The methodology that I'm going to be using to really understand this stock is from the book Buffettology. Personally, my valuation methodology is really not calculation intensive. I believe that there are other people that can calculate and have much better inputs than I ever could. So really, I take a more broad overview look. I look at some key areas in the stock to make my decisions. So first, what I'm going to look at is if the company has moat. From this analysis from Fidelity, as we can see, it is a healthcare company that is in the life sciences tools and services. From everything I can see, it does look like this company has some pretty good moat. They develop scientific tools and technologies, and really that is something that's very hard for anyone to really come in and replicate. And looking into just some Reddit comments from this post, we can see that someone commented saying that Thermo Fisher is a dominant market player in a huge amount of molecular biology and biotech categories. So to me, it looks like this company has great moat, and so I am interested in continuing my analysis. So now we're going to be looking into the company's debt and looking in to see how they are financed. Looking at the debt to equity ratio over time as well as the long-term debt to equity ratios, we can see that it is slowly falling over time, showing me that this company is not very levered. The ratios are below 1, and this does look very good to me. Furthermore, from the below chart, we can see that the shareholders' equity is increasing over time. Debt is increasing, but again, the equity is definitely outpacing the debt. So now let's take a look at the company's earnings and see if they show a strong upward trend, because that is what I'm interested in buying, winners in the space. Looking back from about 2010, we can see that the earnings of this company are in a upward trajectory. However, and very reflected by the stock price, since 2020, the company has been relatively flat. And taking a side note here, this is really what I'm seeing in Thermo Fisher, and this is really the whole crux of why I want to look at this company. It seems to me like this company really accelerated its revenues and it got investors very excited during COVID. However, since COVID, it has been on a normalization trend. And this graph is really painting that picture in my opinion. So great thing to see. And again, I'm just trying to look in this company to determine, do I think that they have hit their normalized levels? And if so, are they something that I want to invest in? The next area that I want to look into is how the company allocates its capital. Or simply put, are they operating in spaces that they are very well versed to operate in, or are they breaching out to places that really they shouldn't have no business doing business in? This is from one of their recent 10Ks, and as we can see, they have 4 segments, which are life sciences, analytical instrument, specialty diagnostics, and laboratory products. Judging from these, I don't see anything out of the ordinary that makes me think they're trying to operate in a space that they have no business working in. I now want to look to see if the company has been buying back shares, and this is important to me as this is a large investment that the company would be making, and it flags to me that management is very confident in their stock price over the long run. As we can see from this graph, the company has been buying stock back. As we can see, the shares over time are decreasing. Furthermore, looking at the company's treasury shares, we can see that this balance has over doubled since 2021. So yes, the company is buying back their shares. Next, I'm going to take a look at the company's retained earnings and see if over time the company is increasing its shareholder value. And from my calculations, it appears that the retained earnings per shares is on a increase. Speaking of equity, I'm now going to take a look at the company's return on equity, and I want to see, is it above average in this industry? And looking at the noted graph, we can see that the company is not above its competitors right now on its return of equity. However, it is not the lowest, it's not the highest. It is just right in the middle. So it's more of a median, I would say, just looks more average compared to the rest of them. Further looking at the company, do I believe that they are able to raise their prices due to inflation? And from the look at their financial statements, I would say yes, it does appear like they are able to do that. The last area that I look at while looking at a company in the scope of this Buffetology mindset is, does the company require large capital expenditures and consistently upgrading its plant and equipment? As you know, property, plant, and equipment can be very expensive over time. And looking at the most recent 10K, we can see that the company does have a pretty good amount of property, plant, and equipment, mainly from machinery, construction in progress, as well as buildings. However, this balance is $16 million. While that is large, we have to remember that the company has pure cash on hand of $75 million. So the company does have more than enough cash to be replacing this. Does not appear to be a huge burden. So I would say, yes, they require amounts for capital expenditures, but it does not appear to me like it is incredible amounts. And now I'm just going to present a few other areas that I look at when I am doing an analysis of a company. Using the website valueinvesting.io, I did look at the current intrinsic value of TMO just to get an understanding of what this website thinks it is, and currently they say that there's a 46.7% upside. Additionally, we can see from analyst ratings that overwhelmingly they are a buy or a strong buy. And current price targets that I'm seeing are about $600 a share. And now I'm just going to throw up right here some industry comparisons for you to review. But what I do want to just notice is that for a lot of company quality ratios, they are doing quite high. The operating margin is high, return on assets and return on equity are both very high. In all other areas, I would say that TMO is really quite average, but it's nice to see that they're either in the average or doing much better. I don't see them in very low percent ranks in the industry from this graph. The last area that I look in for my analysis is I run a Z-score test over certain financial ratios. The ratios that I look at are the price to earnings, the price to sales, the price to book value, and the price to free cash flow. I look at data from 2009 as well as the past 5 years. For those that don't know, the Z-score represents how many standard deviations a data point is away from the mean of the distribution. It lets me standardize a score and lets me compare the value that I'm looking at today to its population over this time. And this is really playing on the concept of mean reversion. Essentially what I'm getting at is if I see a price to sales ratio that is incredibly low, so in like a -2 or -3 realm, most likely I'm going to be betting on that price to sales ratio is going to be increasing over time to get back to the mean. And if the price to sales gets back to the mean over time in my examples, that means that the price action of the stock is going to also rise. So from this summary, we can see that from the past 5 years, all of these ratios run are in the -1 to -2 realm. And since 2009, it's hovering around just the 0 normal area. So what does this tell me? Well, this really tells me that the company probably is back to a normalized level on a very long-term basis. However, in the short term, we might be seeing some increasing price action as over the past 5 years, we are seeing very statistically significant undervalues in my opinion. So from my analysis, I believe that TMO is a buy, and I bought in at a price of $4.05. And as this channel grows, I will be tracking these companies that I give a buy or sell to, and I will compile that over time so that you, the viewers, can review it. Thank you for watching this video, and let me know what stocks you want me to look at in the comments below.